Onto your markets news now. Asian markets ended up the session in positive territory. That's despite investors treading carefully amid heightened volatility ahead of the US presidential election. Of course, there's uncertainty around any potential shifts in the US economic policy and trade relations, among other issues. All of the gauges that we look at, that is the Nikkei and the Shanghai Composite Index, as well as the Hang Seng Index, all rose in positive territory, in some instances rising by above 2%. US markets ended the session lower at yesterday's close. This as investors stood on the sidelines watching how the high-stakes US elections would pan out. On top of that, market players also await the Fed's interest rate decision this week, with an expectation that rates will be cut by a further 25 basis points, and where the central bank will share its perspective on how it sees inflation and employment trends. The Dow Jones Industrial Average declined by 0.61%. The S&P 500 fell by 0.3%, while the tech-heavy Nasdaq ended the session 0.33% in the red. The all-share index is up 0.1%, currently trading at around 86,400 index points. The rand is trading at 17.45 against the US dollar, 22.66 vis-a-vis the British pound, and 19.02 against the euro. The price of gold is now trading at $2,743 an ounce, while platinum is trading at $1,001 an ounce, while Brent crude is trading just above $75 a barrel. All right, Makwe Masilela is the Chief Investment Officer at Makwe Fund Managers, and he joins us now. Thanks very much, Makwe, for joining us. So all eyes are on the US elections. How do you see things playing out on global markets over the next 48 hours or so?
You know, as it is now, it's very difficult, for most market participants to take a very clear position or investment position based on the elections, because as we've seen that this is going to be a photo shot finish, and as a result, we don't know what's going to be happening thereafter. But we've got different scenarios that have been worked out, and maybe we need to realize that as much as Washington is no longer calling all the shots, but the guys still call plenty of those shots. So it's very important to be mindful how this whole thing will work out. We have seen that there have been what we call a Trump trade, and after the poll showing that at least Harris is coming back, and it seems as if she's edging ahead of Donald Trump, we saw the unwinding of those trades, meaning we've seen the US dollar starting to weaken, because remember, people think that Trump's policies are inflationary in nature, and then that being the case, then it means the current interest rate cuts might not continue. So as a result, the US dollar might continue to firm up, but the opposite is expected to happen when Harris maybe has to win. But of interest is that if it could happen that there is a dispute or maybe there's a delay when it comes to the counting, then definitely we should expect a lot of volatility to continue.
Yeah, and for the benefit of the viewers, the live visuals that you can see there of American citizens voting in the state of Virginia. And of course, we're going to be keeping a very close eye on the voting process and thereafter the results. And so we continue with Makwe. Makwe, of course, this election is quite important because we're talking about the biggest economy in the United States. For the South African market, what are some of the possibilities we could experience post these elections? Because, of course, we're really in the realm of speculation right now. There's the Trump trade and then there's the Harris trade. But, depending on what the outcome is, what could we see on our markets?
I think mainly what will be happening with the US dollar. Yes, we know we've got our AGOA that still needs to be extended, but the biggest impact here is going to be the US dollar. And as a net importer, we want to see whether we are able not to import inflation into our economy, as we know that most of the things are priced in US dollars and the likes of oil, and we know that we're a net importer. So that itself, can have a very devastating or positive impact on our economy from the likes of of maybe not having the kind of interest rate cuts that we're expecting, or to continue to have those kind of cuts, and as well, what is it that's going to be happening with the stability going forward? Because so far, as we've seen even this morning, the likes of Fitch indicated that they might start upgrading our outlook based on that we keep on the path of dealing with our debt. So it's very critical that we don't get to see the boat being rocked, so that we are able to meet all those targets that have been set in the midterm budget. But they can easily be thrown out by a simple thing as the US dollar versus the rand.
All right, let's take a look at a counter, a stock that is Sibanye-Stillwater. They provided the market with an operations update for the quarter ended September 2024. They reported adjusted earnings before interest, tax, depreciation and amortization, commonly known as EBITDA, up 9% on the year before. Also reporting that their South African gold operations had benefited massively from the higher rand gold price, and welcoming changes to the law in the US that will make producing PGMs for them that much cheaper. What are your thoughts on Sibanye, which really hasn't had the best of times when you look at its share price?
Yeah, unfortunately, but at this rate, then probably they will start to recover, and in a very good way. I mean, as we've seen, the EBITDA up almost 9%, and as you indicated, when it comes to the SA gold production, I mean, now the contribution from that is almost increased by 292%, when it comes to EBITDA, and before it increased by only 24%, that is the contribution, which is a good thing. But unfortunately, the sustainable low PGM prices continue to have a squeeze when it comes to PGM prices, and as you said, the US law, that will make it very beneficial for them, because basically the guys will be able to get some tax rebates in a way, and that will encourage people to start continuing to invest more when it comes to those kind of operations, which is the PGM operations. But yeah, at this rate, then definitely they stand a good chance, and not forgetting the fact that they are also exposed to what we call commodities of the future for clean energy. So as economies are expected to pick up globally, then I think they will be able to benefit going forward.
If you have some cash under the mattress, would you buy?
Yeah, I will.
Inaudible. Okay, let's look at one last thing. So concerns have been raised around the Competition Tribunal's decision to block Vodacom's merger with fibre company Maziv, with analysts saying it will take much longer for Vodacom to invest in necessary digital infrastructure. What's your take on the regulatory space when it comes to big consequential mergers and acquisitions deals like this one, and the kind of impact that decisions like this can have on other investors that are contemplating investing in the country?
It's very critical that those sectors are very big and very important to our economy, that they need the necessary approvals. But I think what we are not doing right as authorities is that we take forever to get those approvals. And it's only fair to make sure that if other companies have to merge, then definitely we don't put other companies at a disadvantage, because hence they are called the competition authorities. But yes, taking forever to make a decision and come with a negative decision, then I don't think that's right, and also not good for our investment story back home here. But the fact that it's going to take Vodacom much longer, then as a result that can be used as an excuse. I don't think that's a very good excuse. If it's not good for the industry, then it's okay. Remember, there's a lot of money out there waiting on the sidelines to also want to be playing into the whole thing. And here you are talking two majors when it comes to Vodacom and Vumatela. So it's very critical to make sure that other people don't get to be changed. But we cannot use excuses like, instead of taking us 4 years, now it's going to take us 8 years. I don't think maybe by doing that, I think we're just trying to hold us to ransom, and it's not fair.
Makwe, thank you so much for your time and insights. As always, Makwe Masilela, he is the CIO of Makwe Fund Managers.